The following is paid for by the Real Estate Radio Network. You're listening to Real Estate Radio Fresno on News Talk 580 KMJ and 105.9 The FM KMJ. Now, live in studio, your host, local real estate expert, Craig Barton.
Oh, good morning, Central California. I'm your host, Craig Barton, and welcome to the Real Estate Radio Network. Yes, that I don't know if that deeper voice is a sign of the times or just the fact that there's a season change. And if I sniffle into the microphone this morning, Johnny, just can we edit that out, or are there tones that we can adjust to? Yeah, who knows exactly. Here on News Talk 580 and 105.9 KMJ. Real Estate Radio is a show dedicated to bringing some rational thought to the crazy world that we live in and helping you to rebuild the housing's credit and financial markets. We're going to talk credit, obviously, this morning. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted financial advice. And that's exactly what you're going to hear every Sunday morning from 9 to 10 a.m. right here on News Talk 580 and 105.9 KMJ. Thanks so much for joining us.
You are much slower this week than you were last week. We don't need oxygen in the room today.
We don't need a tank this morning.
I took it home and listened to it with Katie.
Yeah.
She said, "You might take a breath, Craig." It was speedy.
Johnny
this
tells
week
me that all the time
nice
as well.
And slow.
Actually, Johnny sent me a copy of the show, I don't know, a couple months back, and I said, what did I say? I said, can you speed that up? Did you slow that down on purpose or something like that? Oh, my gosh. Yeah, just the way it downloaded, it sounded like really, slower.
Last week, you sounded like you were, woo!
Yeah.
Yeah, but it was great. We had so much.
It was a phenomenal show last week. Yeah. We had Justin Garza, the head football coach from Central High School, on last week. Yeah, it was Justin, it sounded like he was on the way to being matched with a potential donor.
Yes.
BeTheMatch.org/Justin.
And like last week, he was 5 people away from 2,000 on the registry, because Craig and I happen to follow his Facebook.
Yeah.
I haven't seen any updates this week, but last week he was only 5 people away. And his original goal was 100. That's so great.
Kind of blown that out of the water, hasn't he?
That's so great. That was a great show, and I'm so excited.
It really was. Unfortunately, Glenn felt like we had set him up for failure because he had to follow Justin. It really was a phenomenal show. Justin had been diagnosed back in 2010 with Hodgkin's lymphoma. And, man, talk about getting the news, number one, but then receiving the follow-up news that your chances probably aren't that good because of your ethnicity, that there's such a small percentage of Asians, African Americans, as well as Hispanics that are knowledgeable or that actually have taken the time to get the 4 areas within your mouth swabbed, and it's sent back to a laboratory back east to...
We talked about this after we left last week, though, and you said we should have brought it up. He looked so healthy.
Doesn't he, though?
It was crazy.
It's so wild. He really did look... Didn't he look healthy?
I mean, and I've seen photos, and you think, oh, those are old pictures.
No.
That's what he looks like
exactly
right
the way
now.
he looks. And what also boggles my mind is that being a football coach and being a head football coach at one of the largest school districts here in the Central San Joaquin Valley, Central Unified has, or Central East has like 4,000 students or something like that. That's a taxing job. It's a very tiring job. That requires a lot of input as far as time's concerned, as far as being away from your family, and your energy. And wow, I mean, he was on his way to a football meeting last Sunday morning, and he says, I'm meeting with the coaches in another 20 minutes or so. So he had to leave here to head there. Man, for healthy people, it's a task. It's a chore. I shouldn't say chore. It's a task. But for someone that is in the midst of fighting for the second time Hodgkin's lymphoma, it's an absolutely amazing story. So help to be part of the cure. Go to BeTheMatch.org, and you can actually find out more information about becoming a potential donor, about getting on the registry. Some folks may never, ever get called.
Right.
and some folks may get called twice. There was a story that Justin has shared that there was an Asian gal that, based upon her, is it LAF factors or something like that, that she was probably, they said, be prepared, you're probably going to get called twice.
Well, they also said people who cannot get called for like 10 years.
Yeah.
Which is, I encouraged my kids. My kids were like, where can we go do this? And then they said, Mom, you should. And then I said, I'm too old.
Yeah.
Which kind of is a bummer. But you and I are too old to do it.
Yeah, unfortunately.
But my kids were kind of fired up to look for an opportunity for them to go do it because they're all...
Yeah, you can search for the most recent updates. You can go to Facebook and search Justin, that's Justin, Garza, Garza, and you'll find all sorts of information about exactly what's going on here in the Central Valley. What you're finding most right at the moment is that there's tons of football programs throughout the valley, Kerman, Carruthers, Memorial, Central, obviously, that are doing an amazing job getting involved and helping to be part of a solution to a problem that unfortunately just takes too many people at too early an age, just because there's a lack of education regarding getting people registered so that they could potentially be a donor match. So we really appreciate having Justin on the show this last week. As Lisa had said, it's an amazing show. But now it's time to move on. Johnny B behind the mics. Now it's time to move on. Exactly. Pretty amazing. Johnny B always makes us sound so good on Sunday mornings. And Keith Taylor from J.L. Taylor and Associates. You know, have you, in the last 4 or 5 years since the Great Recession, or the second Great Recession, have you applied for something and not been approved for whatever reason? Could it be a loss of a job? Could it be that your spouse, I hear this one a lot, Keith, that your spouse, quote unquote, got the mortgage and the house, obviously, in the divorce, and the judge says, oh, it's all fine, you know, the property settlement means that she's now responsible for it. Yeah, look at Keith.
I'm glad you bring this up because I see this all the time. And basically, whether it be the woman or the man who is entitled to the house, or whoever decides to give it up,
gets stuck with it,
or decides they want it, even if they quit claim it over to the husband or wife.
Yeah.
No matter how it's laid out in the divorce decree, okay, it doesn't matter.
No matter what your attorney says,
exactly. No matter what the judge says, the attorney says, or anybody says, you have a legal binding agreement with the bank.
Yes, you did sign that.
Yes, and that does not change the fact that you are still responsible for that loan.
Right.
No matter what any other document says, until that person refis and takes you off, Absolutely. You are responsible for that loan.
We just had this conversation, not about me, because mine was a long time ago. But I'm gonna post this on my Facebook, and I might just tag some people, because did we not just have this conversation? You're like, Lisa, what are you talking about? You're crazy. Your friend is crazy. Not saying who. But that's great. Thank you,
Yeah,
Keith.
and what happens is, the reason I see this a lot is because the clients are still getting hit with late payments because the person responsible is not making the mortgage payments like the judge told them they were responsible to do. But the bank doesn't care who's responsible. They just want their money, and they'll keep tagging both parties with late fees.
Absolutely. They don't care, that you got divorced.
Nope.
They don't care that you can't get along. They don't care that you live in separate households, or that somebody got a boyfriend or girlfriend before the other, or whatever happens.
Exactly.
They really don't care. It doesn't relieve you, as you mentioned, of your responsibility. You signed a note, if it's secured by a deed of trust, and obviously it is showing up on your credit report. Well, guess what? If there's a 30, a 60, a 90-day late, 120-day late rolling for 16 months, whatever it might be, and that's probably a little far-fetched, because at that point in time, they probably, the underlying investor or servicer would have probably filed foreclosure proceedings. Well, guess what? That's another neat little thing that can show up on your credit report, and it sure as heck can stop you from buying a home. Here's the other thing. Let's say you're actually upside down. Well, guess what? You better figure out a way to sell that piece of property, regardless of who wants to stay in it, or whether you're... we had this question on the show a few weeks back as well, and said, does she think that she can stay in the property because of the part of the property settlement that you might be... Can she afford to stay in the property?
Right.
And if she can't afford to stay in the property, then you better liquidate the property. Whether you're able to make it a traditional sale and you do have equity or a little bit of equity in the property, or whether you don't have equity, and let's say you're upside down, you really can't afford that wake behind your boat or that path of disaster that this potentially could cause, because at some point in time, if you make her or him angry, whoever gets the property in the settlement, and let's say they say, I'm going to get you back, and they realize exactly what kind of weapon that they do have, and I will put a kink in your hose that will last for many years. Well, it can happen. So we've got Keith here in the studio this morning. Go to Keith's website, JL Taylor and Associates, to learn more about their company, as well as the services that they do offer. We're also going to take some listener questions. The Real Estate Radio Network gives us the opportunity to reach so many people efficiently for 1 full hour each and every week. Our goal at the Real Estate Radio Network is to get you, our listeners, the timely and accurate truth about your local real estate and financial markets. We're going to tell you some of the financial secrets that the big banks and Wall Street don't want you to hear, so we can help bring you back home. On today's show, low-income homebuyers left behind. I don't think that there's any part of that is too necessarily surprising, depending upon the market that low-income borrowers live in, because certain markets are just going to outpace income sooner than other markets. And the rate of Americans that are starting their own households is really disturbing singly. Yeah,
really?
That's like taking 3 words and putting them together like I normally do. It's disturbingly low. And we're going to talk about those millennials and exactly why they're well, we all know they like to spend a whole lot of time with mom and dad, so they keep coming back to the nest.
Really?
Yes, really. Oh, my gosh, I'm preaching to the choir there. And thinking about a new home, well, home builders throw in freebies to lure buyers in.
Are they really free, though?
Well,
okay.
Yeah, not necessarily. But, hey, if you're able to get a washer and dryer and it feels free, isn't that all that matters?
It feels free.
Yeah, and so what else can a realtor do for you? We're going to talk about some of the things, or perception amongst consumers, as to exactly what a realtor can do for you. And some say that investors, and I'll say, quote-unquote, flippers, and I have some amazing friends that are flippers, investors are leaving the housing market high and dry. In other words, they've come in, they've done their work, and they've driven prices up, and now they've left the market.
Well, where are they going to find properties to flip?
They really aren't. That's why so many of them. That's why the
they
herd
work themselves out of business.
Yeah, exactly. That's why the herd at the courthouse steps is so much smaller these days. And again, as we mentioned, we're very, very fortunate. We've got Keith Taylor from JL Taylor and Associates here in the studio to talk about credit. And I think you'd be extremely surprised if for whatever reason you've been hit hard by the loss of a job, or let's say, unfortunately, the loss of a spouse, or let's say that the last Great Recession was just really pretty devastating for you and your family. Well, JL Taylor and Associates is here to help talk about, or I should say Keith's here to talk about, just exactly what JL Taylor and Associates can do to help you with their credit repair program. We're also going to take some listener questions, so make sure you stay with us. Do you have a question or a topic that you'd like us to address? Well, let's say you have questions about eliminating debt, or could I potentially refinance and maybe consolidate some debt? Or let's say I'd like some information about a reverse mortgage. I've heard that a reverse mortgage will not cancel debt, but it will cancel the actual payment that I have to make on a monthly basis, because unfortunately I didn't do a very good job of planning for my retirement, or my care for that matter during retirement. Or let's say I would like some information about how Valleywide could help you sell your home. Give us a call anytime, 800-979-3958. Again, that's 800-979-3958. That's our off-air number. Take us with you wherever you go and listen to us on your smartphone at kmjnow.com. You can also go to our website and you can listen to past shows from the Real Estate Radio Network by going to our website at valleywidesells.com. Well, let's take a look at today's hot property, if I can find it here.
Hot.
Yeah, it is very hot, and all of a sudden...
Here's some pictures.
Oh, here it is. It's 2412 Los Altos Avenue. I'm going to tell you this. When we first had the inquiry, and Lisa and I actually went on this pre-listing appointment, really getting the opportunity to get to know the seller and kind of pitch our pitch in terms of how we could potentially sell this home. This particular gentleman, I think I made the comment that I've seen flips
Yeah.
that didn't look as good as this.
The bathroom granite. That's all I'm going to say.
Yeah.
It's worth looking at just for the bathroom granite. It sparkles.
There you go. Today's hot properties are brought to you by Win Home Inspections. Call Bert Welsh today for all your home inspection needs. You can give Bert a call at 559-363-4080. Again, that's 559-363-4080. So when we say call Bert for all your home inspection needs, if you're a seller and you're thinking about selling and you'd like to have your home inspected prior to, and it's kind of one of those good faith gestures to any potential buyer that comes in, you can contact Bert and he can come out for somewhere in the ballpark of $275 to $350, depending upon the size of the property, and he can tell you exactly what that would be. I was just giving you a general range of the cost. But you can actually, it's peace of mind as to the condition of your home and if there's any potential issues that you need to address before you put the property on the market. 2412 Los Altos Avenue. The main cross streets are Herndon and Temperance Avenue. South of Herndon, between Temperance and Armstrong. This 4-bedroom, 2.5-bath home was built in 1989. 1,735 square feet on an 8,000 square foot lot. Again, let me just say this. We've got laminate hardwood flooring all throughout, granite countertop throughout the kitchen and both the bathrooms, tile backsplash in the kitchen, washer and dryer stay, fridge stays.
All the appliances stay.
Everything is absolutely immaculate and totally and completely redone. The only thing that the seller didn't redo were both of the bathrooms in terms of
just the bathtub,
just the bathtub and the tile and the
shower
flooring.
curtain covers that.
Yeah, exactly.
Ready to do it.
Well, and also it gives you the ability to be able to go in, and if you want to make it your own, or there's some modifications you want to make to the tile or the tile on the floor or the tile in the showers, you can do that.
And you know what else? The backyard doesn't have any lawn to mow.
Yeah, isn't that great?
And it's huge.
There is tons of, the house faces north, backyard faces south. Clovis Unified School District, there's tons of cement on the east side of the house. There is a pool and a built-in pool and jacuzzi. The pool was just redone a few years back, 20 to 25-year warranty on the fiberglass. It's an amazing
Well,
property.
they have a storage shed out there that could be converted easily into a studio.
Yeah,
it's that big.
It's a 12 by 12, 12 foot by 12 foot wide and about 8 foot tall storage shed. Again, if you like, now this property, list price $267,900. And I did a search just out of curiosity as well as far as 4-bedroom homes in this particular neighborhood. And a 4-bedroom home is really a luxury. You don't find a whole lot. In other words, the majority of them are 3.2s when they were originally built. So if you'd like more information about this hot property, again, 2412 Los Altos Avenue, give us a call anytime. We'd love to schedule a private showing for you on this particular home. Give us a call, 800-979-3958. Again, that's 800-979-3958. And we'll send you more information about this hot property right to your phone. Look for more hot properties each week right here on the Real Estate Radio Network. Well, the home buying market picked up sharply in 2013, but it looks like as if much of the pickup came from those with the highest of incomes. Now, living in a market where the average sales price right at the moment is currently right at about $200,000, but it wasn't that long ago that the average sales price was somewhere in the ballpark of about $135,000, and then it was $155,000, and then it was $176,000, and wow. It's not that long ago that we were a whole lot more affordable. Well, the home buying index is still at one of the lowest levels that it's been in quite some time. But in those markets where the average median income is a whole lot lower, you're finding, depending upon the price point as far as properties are concerned, that we're leaving a tremendous amount of low-income buyers behind. Overall, the number of mortgages made to buy homes in 2013 rose 13%. From 2012 to 3 million, according to a report by the Federal Reserve researchers based on home lender data submitted under the HMDA, or Home Mortgage Disclosure Act. Yes, we had to keep that information when we were actually a banker. HMDA. However, the share of such loans made to low and moderate income buyers fell sharply. In 2013, about 28% of the loans to buy homes went to low to moderate income borrowers versus 33%, so fell by 5% from 2012 to 2013.
What does that mean?
Well, what it means is that prices are outpacing incomes. It wasn't that long ago in 2006 where you would find that, to give you an example, the home that's directly across the street from my house was sold back in 2004, 2005 for $435,000. Mm-hmm. Well, the average income here in the central San Joaquin Valley might be $32,000. So how many borrowers do you have to, well, at the time you didn't. You just had to state your income, and then you'd qualify for whatever you needed to qualify for. So that was nice and easy. But really, how many buyers do you have to put on a loan or on a mortgage application in order to qualify for a $435,000 purchase? Also taking into consideration the amount of debt that you actually carry as well. Well, it's not surprising that folks felt like at some point they were going to get left behind, because this is our window of opportunity, and unfortunately the window is closing fast. So, not to say that this is anything like 2006, but
thank you.
Thank goodness. Housing appreciation we're back in the single digits, so our expectation is that what you're going to see from mid-2014, July, let's say, the rest of the fiscal year, July 2014 to end of June 2015, that it's going to be in single digits, and this is much, much closer to what you would consider to be typical. So 3 to 5% is what is quote-unquote normal and what we're hoping for, because unfortunately, if you heat the wheels up too fast on this wagon, we've seen in the past that they do come off. Now, the rate of Americans starting their own households is disturbingly slow. It's all to blame on those millennials. Well, new data show that household formation slowed considerably last year, a potentially ominous sign for the housing market, or the fact that your kids are just coming back home and wanting to live with you until their student debt gets paid off. Well, household formation is a key driver of demand for housing. When the economy stumbles and joblessness rises, more people tend to move in with family or double up with roommates.
Yay.
Yeah, when the economy expands, the opposite takes place as people strike out on their own, and housing formation also rises when immigration increases. Very interesting.
Interesting.
Yeah, it's those millennials. They are the ones that really are to blame. And thinking about buying a new home, well, builders throw in freebies. That's the way it always happens. Obviously, you've seen a huge increase in building of new homes. Clovis, as an example, we've seen, oh my gosh, it's a 400+% increase in the number of permits that have been pulled for purchasing new homes. And freebies. What do freebies mean? Keep in mind, some way or the other, you actually end up paying for it. And trust me, they also buy enough washers and dryers and window coverings that they're able to get an amazing deal. What about backyard landscaping? Yeah, well, it's one of those freebies.
Nice.
Yeah. So expect that if you go out and see Wilson Homes today, they might be throwing in some freebies.
Upgraded faucet handles.
That ultimately that you're paying for. So there is no such thing as a free lunch. So what else can a realtor do for you? Isn't it kind of interesting? What's that?
I'm kidding.
What'd you say?
I don't know.
Isn't it amazing, the perception of what exactly a realtor does when it comes time for, why do I need a realtor? Why do I need that middleman? Why don't I just call the realtor on the sign? And wouldn't it be actually better for me to deal directly?
Just go online and print out a contract. And
yeah, exactly.
You know legally what you're supposed to do, right? I just have to pass this huge test. Come on.
Well, just to address real quick the statement that I made about wouldn't you want to contact the realtor on the sign because they're dealing directly with the seller. Mm-hmm. So you want to crawl in bed with the agent and I don't mean literally, I mean figuratively, right, Jen? With the agent that's actually representing the seller. Don't you want a little arm's length? And here's the deal. You're not paying for it anyway. And the reason I say that is commissions are paid and pre-negotiated by the listing agent with the seller. That's already in writing. You're not paying for it.
It truly doesn't matter. We can say it until we're blue in the face. People really think that that's a good idea.
Yeah.
I mean, because being on the front end of Valley-wide phone-wise,
yeah.
Well, if I call you, won't that Craig Barton with his HUD home work be a special deal?
Yeah.
Yeah.
Right.
He'd love to, but...
Yeah. It doesn't work that way.
I mean, I think people just don't see it. And people think that they really can on a yellow notepad, figure out.
It's cocktail napkin.
Oh,
in crayon.
I'm sorry.
Figure out the home selling process, right? Absolutely.
Call my grandson. He'll help.
Yeah. When it comes to buying a home, the majority of buyers agree they need a realtor. And I did say majority, to negotiate for good prices and better terms of the sale. What else can a realtor do for you other than negotiate price and actually term? So when a home buyer needs the help most of a realtor, 79% of the consumers agree that, well, number one, finding the right home. Now, to me, that seems interesting. And the reason I say that is this. Because most consumers, we can sit down with a consumer and show them, number one, here's what you're pre-approved for. We can go through the process of saying, okay, we identify where you want to live, the amenities, bed bath count, square footage of the home, which school district you want to be in. And we will set them up what's called a portal. And a portal basically auto-prospects. It's a web portal that auto-prospects for you based upon the criteria that you share with us. And then inadvertently, they go directly to our website. I shouldn't say inadvertently. It seems like all of a sudden the next day they've signed up on our website, right, which is totally different than us setting up that web portal.
Right.
And they don't necessarily, I guess they're afraid that they're going to miss something. Well, finding the right home, there's been many times where we find the right home because they've been on our website or they've had a portal set up for them. And they do the looking in terms of identifying which property is necessarily right for them. So 75% believe that negotiating on price, and absolutely, it's important to have an advocate in your corner that helps to educate you in terms of, so really what is the right price for this particular property? And what is the market telling you? Do agents talk about market dynamics? If they don't, they should. Because market dynamics is just this. It's simple economics and simple supply, and demand. So is it a seller's market? Is it a buyer's market? Has inventory increased over the last 6 months, or has it decreased? Where's the market headed? And it's important that you as a seller, as well as a buyer, at least have somewhat of a feel as to what am I getting into?
Right.
What's it been like? 60% say that negotiating the terms of the sale. Well, what are the terms of the sale? What is your earnest money deposit? Mm-hmm. So anything, I shouldn't say anything, most anything other than price.
Right.
What inspections am I going to ask for? Again, dynamics play a huge part in what you ask for. If it's a seller's market, I don't know that I would be asking for the seller to pay for inspections. It doesn't forego your right to be able to have the property inspected.
Right.
56% determining comparable sales. I think this one is a huge one. And
how would you do that from home?
Yeah,
Zillow.
Well, Zillow would tell me exactly what that house is worth.
Yeah, okay.
But here's what I think we need to work on is, to me, that statistic tells me that not enough agents demonstrate the value of their knowledge and knowledge as far as the market's concerned to ensure that you're comparing apples and apples and not apples and kumquats. Because it really is important that you identify where the market's been, where it's headed, and how that relates to the property that you're interested in. And 30% determining affordability. I think that one's an extremely important variable there. It does, I think, to a certain degree. Most realtors don't delve into mortgage financing or have a decent handle. They might say they do, and they might say that they have a mortgage calculator saved on their desktop, so they're able to actually jump on and tell you what principal and interest might be at 5%. Well, that's just not enough, I don't think. I think it's extremely important that real estate folk get educated on anything and everything that they can find out about.
That's why you go to work for a mortgage and a real estate broker all at the same time when you first start.
Sure does help. And
good info.
Yeah, absolutely. I'm a little partial, I must say. Again, if you have any real estate or mortgage related questions or a question about the information that we share with you on our show this morning, it all starts with one call. Give us a call anytime on our off-air number at 800-979-3958. Again, that's 800-979-3958. Take us with you wherever you go and listen to us on your smartphone at kmjnow.com. You can also check out our resources online. You can begin the search for your next home by just going to our website. Go to valleywidesells.com and take over the search for your next home right in the comfort of your own home. Well, after the break, we are going to continue our conversation with Keith Taylor from J.L. Taylor & Associates. Have you been denied credit for something, whether it be an automobile, whether it be a mortgage? Did something stop you from actually making that purchase? Well, if you'd like to get in on some inside information on just exactly what J.L. Taylor & Associates can help you do to repair your credit, make sure you stay with us. You're listening to the Real Estate Radio Network, helping you to redefine real estate here on News Talk 580 and 105.9 KMJ.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
Have you ever thought about going solar? It's never been easier to go solar than with a SunPower lease. You'll start saving money the very first day. Arise Solar has a team of energy consultants ready to help you determine if going solar is right for you. Start taking control of your energy costs. Contact Arise Solar, your local SunPower Elite dealer, at 449-8989. That's Arise Solar at 449-8989. Or use press 4 keywords, Arise Solar.
Men, are you over 40 and experiencing decreased libido, decreased energy, decreased stamina, and decreased muscle mass? Are you just not motivated to get out and live life the way you used to? You might be experiencing the side effects of low testosterone. The treatment is simple, effective, and covered by almost all insurances. Don't let life pass you by. The Testosterone Optimization Program can help reverse the effects of low testosterone and premature aging. Studies have shown that going untreated, low testosterone can actually shorten life expectancy. We don't have to be satisfied with aging the way our fathers aged. Decrease the risks of age-related disease and get on your way to healthy aging. Take charge, take your life back, and call today. 844-TOP-HAT-1. That's 844-867-4281. And stop letting life pass you by. 844-TOP-HAT-1.
Rick Ransom, a local guy, began his career in mortgage lending in 1989. In 91, he became one of the first reverse mortgage lenders in California. Since that time, he's helped hundreds of seniors with reverse mortgages and other senior-related issues. And he's one of the few in this business who is a CPA.
This is Rick Ransom. Much of what you hear on TV and radio is not altogether true. There is misinformation. A reverse mortgage can help you supplement your retirement, pay off your existing mortgage or credit cards, even purchase a new home. If you're ready for a free face-to-face meeting with someone with 45 years experience in the application process, call me at 221-5355. That's 221-5355. I look forward to meeting with you.
DRE number 513201, NMLS number 240770.
When it comes to investing in wealth management, you can find good counsel from someone at a local office or a Wall Street firm. And if you do well, a main office in New York does well. However, we at Thies & Duker Financial Consulting Group offer a very different choice. Our associates offer Wall Street experience from an independent, local company. We answer to you, not New York. Thies & Duker's owners, associates, and staff members live right here. We're your neighbors.
I'm John Morgan, a financial consultant with Thies & Duker Financial Consulting Group. I recently joined Thies & Duker because I wanted to serve my clients in an independent firm that truly values clients, families, and this community. If that's what you're looking for too, give me a call at 448-8190.
Feel right at home at Thies & Duker. Visit us online at thiesandduker.com. ThiesendUker.com.
The consultants at Thies & Duker are registered representatives with and securities offered through LPL Financial, member FINRA SIPC.
All it takes is one call to the professionals at Valley White Homes, and you'll start building wealth in real estate. Whether you're looking for your first home, moving up, or your next income-producing property, let Craig and his team at Valley White help. There's never been a better time to get into the real estate market. Start the search for your next home by visiting our website at valleywidesells.com or call toll-free 800-979-3958. That's 800-979-3958, and put the seasoned professionals at Valley White Homes to work for you.
You're listening to the Real Estate Radio Network with local expert Craig Barton. Now, here's Craig.
Yes, during the break, we're talking about Ebola. And, this week, this just in.
Yeah, well,
first confirmed case of Ebola, the Ebola virus.
That's happy Sunday.
Yeah, happy Sunday. Oh, my gosh. Everybody's so anxious to get to the stoplight sooner, and I wish, Michael J. Mayer, he is someone that, if our listeners, he's been on the show twice, does a phenomenal job. We're not trying to upstage you by any stretch, Keith. It's just,
sorry, I brought
I get on the
soapbox.
What's that?
I brought up people on the break.
Michael J. Mayer talks about the generosity generation, 7 levels of communication going from, it's just so important to make a difference. It's so important to take some time and I really do think in business that if we take that approach, but more importantly, I think just in life, if you going from relationships to referrals, just taking the time to slow down, would you all please? I mean, why are we in that big a hurry that we're willing to we're gonna speed past you, and some people are gonna flip somebody off, because our phone's ringing.
Because we have an email. Because
we've got to get there sooner. Because we either didn't get up, or the kids didn't want to get up. Slow down. I can't say it enough.
I don't really think that's going to happen.
You don't think that's going to happen?
Except for people who I think it's an individual thing.
Yeah.
People like me who are boring and cool with just like
a certain pace as far as life's concerned.
I'm good with that. I'm okay with the fact that I'm old. Like my kids are like, Mom, you're slow.
Not old, so let's just get
Mom, you're slow. You're this, you're that. Well, I don't. What are we really in a hurry for all the time?
I don't know. We always want to be first. We just need to slow down. We need to slow down and take the time to make sure that others be more concerned about others getting there before you. I mean, really genuinely.
I like that.
Honestly. Let them get there.
This is like one of those the service announcements. I've lost the word.
A PSA.
Yeah, a little mini PSA on how not to get Ebola by Craig Barton.
Oh my God.
Slow down.
So how we're coordinating Ebola. So we went from Ebola to letting other people get there first, and now we're going to talk credit repair with Keith from J.L. Taylor and Associates. It was really interesting because before the show, we were sitting in the studio here and chatting it up like we normally do on a Sunday morning, and we were talking about credit repair, and then we got into this discussion, and Keith brought up some amazing things that I thought really kind of, unfortunately, lead all you cattle down the cattle chute towards slaughter. I'm just kidding. But
very quickly.
Very quickly. So when we're talking about credit, and Keith brought up, Keith, tell our listeners, really, where did credit originate from, and why is it so standardized, and why the 3 bureaus, and how does it affect me today, and when I qualify, and what I pay?
Basically, the 3 credit bureaus were established by the banking industry, obviously, because that's going to be able to allow them to differentiate who they can loan money to and at what level by risk. So if you have low credit score, obviously you're going to have high interest rate. Good credit, low interest rate. Obviously, seems to me, but being in this industry for 10 years now, the banks want you to have bad credit.
But not too bad, right?
Not bad enough to where they can't loan you the money, but just bad enough where they can charge you 20% interest on a credit card. So
they're not there for the consumer.
No, actually, it's the complete opposite, because there was the mortgage settlement that just occurred in 2012 with 5 of the most major banks for loaning.
Bank of America, Wells Fargo, Citibank, J.P. Morgan Chase,
exactly.
Yada.
Yeah, exactly. So what happened was they offered in settlements to consumers of about $700, but that settlement wasn't geared towards the consumer. It was geared towards the investors on Wall Street.
Right.
So they were all compensated, but the investors were compensated, but the consumer, again, left holding the bag, and nothing was given to them. $700 for losing a $400,000 house. Okay, great, thank you. And then also left with bad credit on top of it. So that's something that the Frank Dodd Act did not cover as well, and that we're in fighting for right now for the consumer. So
it's amazing because there's a lot that number one, I think that $26 billion 49 states attorneys general action that you're referring to, I think it was really intended to get Kamala Harris reelected doing something, at least something a little greater than the state's attorney general or something like that, or whatever she's doing. But Dodd-Frank didn't fix. I think there's unintended consequences as far as that act is concerned. The banks banks aren't really that affected in terms of they're just not. Whereas the little guys are far more regulated and far more affected in terms of what they can and can't do. Some of the things that came out of Dodd-Frank, I think, are good. And I think creating a little bit of a distance between the appraiser and those folks that can't control themselves, because unfortunately they want to call up and say, I need 190 on this appraisal, otherwise it's a dead deal and I'm not going to send you any more business anymore. Well, unfortunately, that's one of the good things, I think, that came out of Dodd-Frank.
Yeah, some good things did come out of that, and they had to because of the mortgage crisis. But then again, it's because they had to do something and show that they were taking action. But the action is not necessarily helping the consumer. They didn't say, hey, let's go ahead and take every foreclosure and every short sale off the credit of the consumer because these were bad loans and we just were sued for this. No, they're trying to keep that on everybody's credit report, which is not fair to the consumer.
Right. So now that we've all come to the realization that credit really does make the world go round, regardless of the initial intent as far as why they establish the credit reporting bureaus. Mm-hmm. So now we need credit. We need credit in order to function. If you go out and apply for, you go apply for a cell phone with Verizon, they pull your credit. Mm-hmm. And if your credit's not good enough, they send you over to T-Mobile. And I'm just kidding. So give us an example. When you talk about credit repair, what are some of the things that J.L. Taylor and Associates are able to do in order to help consumers kind of get back in the saddle again?
Well, we help consumers that are applying for home loans, business loans, car loans, credit cards, and things of that nature. So basically what happens is you have about 70% of the items on usually a credit report are inaccurate to begin with anyway. So we're able to help with items such as collections, charge-off, late payments, tax liens, bankruptcies, repossessions, foreclosures, and student loans. So basically what we do is we go in and remove the inaccurate reporting information on the credit reports, and that, in a sense, goes ahead and raises your credit score. God
forbid you ever have to go to the hospital. I had an incident this last year in February, and unfortunately I got a little dehydrated, and I had to. It was a lot scary because I got feeling sick, and my son ended up taking me to Clovis Community. Well, that little stay, I was released at 5:30 in the morning. That little stay cost me about $1,900. Well, the unfortunate thing is that when you do go to the hospital like that, and you may communicate directly, and all of a sudden you get a little bill. And
5 bills.
Yeah, exactly. Or five. And I got 2 in this particular instance. And we contacted them and said, okay, so here's the deal. What do we need to do? But even if you contact them and you make arrangements, I didn't have $1,900 sitting around to pay them all at once. So I made payment arrangements. Well, the unfortunate thing is payment arrangements won't stop them necessarily from sending you to collections. Well, now all of a sudden you've got a collection or 2 or 5, as you had mentioned, Keith, showing up on your credit report just for the simple fact that that's the amount that insurance didn't pay. And because the creditor or the hospital or whatever department that it was billed to, depending upon what your ailment was just a little too antsy and decided to go ahead and shoot you off to collections that much faster. Those are things that you're able to help with.
Yeah, most definitely. And I see that the reason I say N5 is because it's normally like 4 or 5 bills that you receive if you go to a hospital that you don't even know. I never saw the guy. Who was the anesthesiologist? I didn't even have that, I thought.
Right.
Or the person that, dropped off a couple pills, or, and they're charging you like $300 for the drop off of the pills. And, you got weight on a scale and that guy, it's ridiculous. And then you would think that your insurance covers it, and whatever your insurance doesn't cover, then a lot of times they don't even tell you that there was an outstanding balance, and then all of a sudden it shows up on people's credit, and they're like, I don't even know what this is. I have insurance, and so we have to go in there and remove these items from the credit reports. And this happens all the time. So, and that's another case of incorrect reporting, because these should never even have been on the credit reports to begin with, most of these items.
So whether it's something that might be relatively small, or let's say it's something that's relatively small that you've already paid. Let's say you've paid it and you've dealt with it, done on down the road, but for whatever reason it's still reporting. Those are items you're able to help
remove, yes.
Address as well.
Exactly. And the thing is, a misconception of the consumer is, I paid that, or I'm going to pay that. So it's,
How many times have I heard that?
Like I try to explain to them, going ahead and just paying that is not going to do you any good,
right?
Because you already let it either go to collections
or
to a charge off. So yes, it's already there. So what you want to do is have that removed, and unless you can get that removed, then it's not going to do you any good.
Right. And so we've talked about the smaller ones. Give us some examples of just some of the experience you've had with larger, quote-unquote, things in terms of whether they're tax liens, whether they are larger collections that you've been able to address.
Well, what usually happens is we'll get clients that have, say, a judgment. And a judgment, I'll take it from the beginning. A judgment starts out from a letter you get in the mail, which is called the summons.
That usually determines whether...
And basically, in probably 9 out of 10 times, the consumer ignores it.
Right,
because they think it's going to go away.
Bad news don't get better, kids. Yeah,
so if you read the first 2 lines, it says you have 30 days to respond to this. And so when you don't, then it's filed in court that you didn't, and then they can get a judgment against you in court because you didn't show up. Because the next thing they send you is something that tells you have a court date. And again, they think, oh, you know what? No, I don't know. That's probably not real. I don't got to show up. I didn't do whatever. Whatever they're thinking, I don't know what their thought process is, but they don't show up. That's the main bottom line is the consumer didn't show up, and so they have a judgment. It's called a default judgment against them, and it goes on their credit under public records, and that can drop your score about 100 to 150 points in one shot. So, and thing is you owe that debt, and there's no getting out of that debt once you let it go there.
And that
there's
debt
no
accrues interest.
Yes, it does, and court fees.
Yeah.
So, just an example: a $6,000 debt. Original debt will turn into probably about $12,000 to $13,000 if you let it go to default judgment, because there's attorney's fees, court fees, interest, all that tacked onto that. So getting back to the summons, it is important that our clients come in and they bring the summons with them and say, hey, I received this.
Help.
Yeah, exactly. And then we can intervene and take care of things the proper way, and so it doesn't get into a default judgment.
Right.
So, and just educating the consumer that this is something you can't ignore. You do have to respond to this, and it is a legal document that you have to respond to.
Some folks that have come through the Great Recession, this last Great Recession, and may have owned a home, and unfortunately, let's say because of the loss of a job or a reduction in income or the loss of a spouse, unfortunately, they may have tried as long as they could to keep up the payments on that mortgage, and unfortunately, when that 2-year fixed mortgage jumped in payments by the payment jumped $1,200 above where it was, and they finally said, I just can't keep this up anymore. You've been able to do some pretty amazing things with regards to foreclosures as well.
Yeah, we've been able to get a lot of those removed, and that's due to the fact, the banks making all those mistakes and giving out all those bad loans.
That one guy signing all those documents like 12,000 times.
Yeah, right. And so basically a lot of times, if you notice, these mortgages are sold and resold. And most of the time, the second or third or fourth guy does not have the original signatures in the documents.
Because the first guy said, trust me.
Yeah, exactly. So if they can't produce those in a certain amount of time, then legally they have to remove that by law.
Right.
So
it's so amazing. All hope is not lost, that's for sure. So the most important thing, go to Keith's website, jltaylor.com, to find out more information about JL Taylor and Associates and the services that they do offer. Or you can contact Keith directly. Keith, what is the best number to reach you at?
At the office at 559-472-3147. And once again, that's 559-472-3147. 559-472-3147.
It really is just as simple as picking up the telephone. You can contact Keith again at 559-472-3147, or you can contact us here at the Real Estate Radio Network at 800-979-3958. Again, that's 800-979-3958. It's important to it's really as simple as one call. They can contact you, set up a no-obligation consult where you can actually take a look at their credit report and cover. So what exactly is on there? Is this going to be complicated? Is it going to take a long time? And just really setting some baseline expectations. I know that that's one of the things that we really like to do is we like to sit down and set a baseline expectation. And let's say it is something that you're looking to let's say, get pre-approved for a mortgage. Well, let's say we need to get you over to Keith and J.L. Taylor and Associates. All hope is not lost. It really just is a matter of time. Tell our listeners what the process looks like sitting down with you from beginning to end, and I'm sure it probably differs from consumer to consumer depending upon the amount of information that's contained on their credit report that might be erroneous.
Yeah, exactly. Well, what it looks like would be the consumer would give us a call, and then we would schedule a free consultation. If they had a credit report, they would bring that in with them. We would like to get that ahead of time so we could review that, actually. If they don't have one, we would send them credit authorization forms, and then we would pull their credit. And then we would review that, set up an appointment, bring them in, sit down with them, review the credit report. So what we'd do is we'd first go over their positive trade lines and let them know how they're using their credit and how to use it in a more effective way, because obviously most of the people that end up in our office are using it incorrectly. There's a thing called the 30% rule, which people don't really understand. So if you have a
30%, and it's not, that doesn't mean 30% over your credit limit.
Exactly. So 30% of your max. So if it's $1,000 limit, you don't ever want it to be over $300 when it reports that month. I mean, you could charge up to $700, but it doesn't mean. But
you better make a $400 payment
before the bill prints, because once it prints, it reported to the bureaus already at 70%, at $700. And even if you're thinking of making that $300 payment to knock that, or the $400 payment to knock that down to $300 to 30%, it doesn't work that way. It has to be, the 30% has to report at the time it reports to the bureaus. So
it's really important for the consumers to really take charge, take control, but most importantly, I think, get educated. So taking the time to make the phone call. Again, 559-472-3147. Again, 559-472-3147 to get a hold of Keith, so that you sit down and you can educate the consumer on, okay, this really isn't that bad, or it's going to take some time because of the amount of information that's actually contained here on the credit report. This could take us a little bit longer. But the thing is that bad news, as we always say here on Real Estate Radio Fresno, bad news never gets better. It just stays there and percolates for a long, long time. So the sooner that you actually pick up the phone and make the call, the sooner that we can help with Keith's help, getting you cleaned up and all prettied up and ready to go to the dance, right? Right, Lise?
There you go.
Let's take some listener questions. Phil from Riverdale, my wife and I are buying a home, and the listing, it shows that the home is being sold as is. We get this question so often. What exactly does as is mean? Well, this can mean a lot of different things to a lot of different people. As is, it could be the listing agent and their lack of knowledge or their perception that a certain type of financing won't get approved for this particular property. Or it could be the seller saying, hey, my house is so clean that I'm not making any repairs. It's as is. Well, it's so important. Or let's say my house really isn't that clean. It was built in '64, and there's some issues with it, and I'm selling it as is, and I know that I'm selling it as is, and I'm pricing it accordingly because of all the repairs that need to be done. Well, again, it does mean a lot of different things to a lot of different people. Years ago, I would have an agent, and I say years ago, I would have an agent that would say, well, but Craig, it says as is in the contract. How can the underwriter require that we get a termite report and a clearance for Section 1? Well, or make repairs as far as the roof's concerned. the one thing I will say is this: whether you're a seller or whether you're an agent, the contract does not supersede the collateral's responsibility to actually qualify for financing. So you can't get a loan on a shopping cart turned upside down with cardboard on the sides. It just doesn't work that way. There's certain minimum standards.
That's right. It's as is.
But it's as is. It doesn't matter. You can say as is all day long, but ultimately when the day is done, the collateral must qualify. And typically where we find this is this. The contract says as is. The appraiser goes out and goes, wow, there's a skylight where there shouldn't be a skylight. Oh, wow, there's termites holding hands, and that's why the front porch is still standing. Well, what they'll do is they'll say, hey, I want a roofing contractor to give you a 2-year roof cert, and I also want a termite inspection. Well, guess what? They come out and do an inspection for wood-destroying organisms, and they say, hey, it needs to be tented. Well, that's why the seller has priced it accordingly. Well, if we need to, we can always increase the price. So if we need to, and the seller's got to spend $3,000 for clearing all the termite issues, we can do that. Or if we need to patch that skylight where there shouldn't be a skylight, we can do that as well. You may have to factor that in as far as repairs are concerned. And you know what? When the day is done, the buyer might have to pay a little bit more. The seller might have to net a little bit less, but there's a way to get it done when it comes time for negotiating some type of end to the means. So contingency removals, my husband and I, and this is Susie from Riverdale also. My husband and I are in contract to purchase a home in Madera, and we found another home that is about $20,000 cheaper, and we want to cancel our current escrow. Unfortunately, the sellers aren't going to be too happy about that, Susie, just so you know. Can we do that, and can we get our deposit back? So my first question is have contingencies been removed? And if they have not, with the current California Association of Realtors contract, contingencies, you have 17 days to complete all inspections, and that is not a passive removal. In other words, the removal doesn't come in time. It has to be active. It must be done in writing. So on day 18, if you're a listing agent, it's extremely important that you remove all contingencies in writing, because if you don't, and it's a 45-day contract, you could get 44 days in and the buyer could cancel for any reason and get their deposit back. It just so happens in this particular instance that the listing agent delivered to Susie and her husband a notice to close escrow, which is the wrong form. Sorry, it's you can't, no matter what you do. Now, you may have to go to small claims to get that deposit released, but you could get a little more than your deposit back, as well as get all the fees covered by going to small claims. The unfortunate thing is it's unpleasant, and you must go to small claims. So thank you so much for the listener questions. Again, if you have any real estate or mortgage-related questions, give us a call anytime. 800-979-3958. Again, that's 800-979-3958. Start the search for your next home by going to our website at valleywidesells.com. A huge thank you to Keith Taylor from J.L. Taylor and Associates. Thanks so much, Keith. Really do appreciate you.
Thanks for having me.
Making sure that you come into the studio and educating our clients. You can call Keith for your private consultation. Give Keith a call, 559-472-3147. Again, 559-472-3147. Big thank you to Johnny B. behind the mics and Lisa Casso, client mommy as well as realtor to be.
Amen.
Yeah, Department of or Bureau of Real Estate Salesperson.
They recognize me. You can look me up and everything.
Exactly. Our goal with the Real Estate Radio Network is to get you, our listeners, the timely and accurate truth about your local real estate market, so we can help bring you back home. Don't forget to tune into the Real Estate Radio Network next Sunday at 9 a.m. here on News Talk 580 and 105.9 KMJ.
Preceding is paid for by the Real Estate Radio Network.